video is intended for people who are kind of at the beginning of a mortgage default situation or are about to kind of go into a mortgage default situation when they're starting to look at all of their options with the home. If you're a subscriber to my page, welcome back. If not, make sure you subscribe, like the video, let me know if you have a comment or a question. I really enjoy hearing from you guys, and I try to always respond to everybody as quickly as possible. Okay, so a mortgage relief analysis is kind of the phrase that I use to talk to homeowners who are new to the default process or who are about to go into default to kind of help them understand everything that you need to understand so that you know what all of your different options are. If you're feeling financially stressed, if you know you're not going to be able to make your mortgage payments long term, or if you're new to being, in default, this is something that you want to pay attention to. And then after we go through the different options that are available, you might want to branch off and watch some of my other videos about more of the options in detail. This video is more of an overview of everything that's available to you kind of once you go into default. So the first thing you need to ask yourself if you're in default or about to go into default is my financial hardship going to be permanent or temporary? And that should be a pretty straightforward question. If your income is being reduced in a way that you know it's not going to go back up, you probably have a permanent financial hardship, right? If you have a temporary financial hardship, like you had a huge one-time expense that is going to be paid quickly and your income will resume, that's a temporary financial hardship. The reason you want to know the difference between a permanent and a temporary financial hardship is a temporary financial hardship might be the better option for you to take advantage of some of the options to save the home. If you have a permanent financial hardship, meaning things aren't going to change, you might be looking at trying to exit the property to get yourself to a little bit more of a permanent situation that you can afford. So first question is temporary or financial hardship. The second thing you want to understand is your particular foreclosure timeline. So I'm in the state of Washington. The homeowners I help are in Washington, and we have most foreclosures here going in a non-judicial way. If you want more information about Washington's specific foreclosure timeline, there's a video about that here. But basically, if this video is being disseminated to people in all different states, your first step when you're new to the process is to find out what's the foreclosure timeline and how far along are you in that process. If you're at the very beginning stages, or if you're not in foreclosure yet, then you really want to do some research. Talk to an attorney, talk to your bank, look online, find some reputable sources telling you what is your foreclosure timeline and how much time do you have to make a decision. And then once you figure out what you're going to do, you'll be able to know how much time you have. Figuring out your timeline also helps you know whether you have enough time to try one option and then a backup option, right? Many homeowners want to go through the process of trying to save the home, and then if that doesn't work, they then want to sell the home. Understanding your timeline is really key to understanding how much time you have to try things. So first, permanent or temporary hardship. Is it permanent? Is it temporary? Then figure out what your foreclosure timeline is. Once you know those two things, then you need to know all of the different options you have to save the home and all of the different options you have to let go of the home. So just real briefly, if you are in default, if you're not paying on your mortgage and you want to keep the home, your options are the following, right? You can go through the loan modification application and negotiation process. Real briefly, a loan modification is a way to get out of default where the bank will write you a new agreement where you get to resume making your regular payments without having to pay everything that you owe all at once. Most commonly, a loan modification will take the amount that you owe, they'll either put it on the end of the loan or create kind of a second partial claim that becomes due at the maturity date of the loan. Most commonly, the bank will write you a new maturity date, you'll have a new principal balance that includes the amount that you owe, and then you'll just pick up making a regular mortgage payment that is very close to the original mortgage payment you were paying. If you want more information about loan modifications, tons of videos here about all of that, but that's one option to save the home. Another option to save the home is a repayment plan. A repayment plan is different from a loan modification in that it's not a new agreement. You basically start paying your mortgage payments again, but you pay an extra amount every month toward the arrears. Once you've paid everything off that you owe, you then just resume making your regular mortgage payments, but you're paying on the original agreement that you signed. So a loan modification writes you a new agreement. A repayment plan is an agreed upon agreement where you get to pay your mortgage payment plus extra. And once you've been fully paid off, you keep going on your original agreement. If you want more information about the differences between those two agreements, there's a video that goes into that. But you have loan modification, repayment plan to save the home. You also have an option, reinstatement, which I'm sure you've thought of. If you were in a situation where you did not have available funds, you got behind, but now you have enough money to pay back everything that you owe and just get back paying your regular mortgage payments, you want to reinstate your mortgage. There are other videos here about reinstatement. Watch those if that's what you need to do. But in Washington, you can reinstate what you owe on your mortgage all the way up till 11 days before a foreclosure auction. So reinstatement might be a good option for you. You basically just pay back your missed payments plus any fees that have been added, and then you resume your regular mortgage payments. Another option to save the home is called a forbearance. Forbearances can be a little bit tricky, so you don't want to rely on this as an overall option to save the home. A forbearance, real briefly, is an agreement that you come to with your bank where your bank agrees to allow you to not have to make payments for a certain amount of time. We're in COVID times right now, so many people are on these COVID forbearance plans. Lots of information on this page about that. But the reason I say forbearances can be a little bit tricky is because oftentimes at the end of the forbearance plan, the bank doesn't provide you a way to get out, right? At the end of the forbearance, let's say you get an agreement for 3 months to not pay your mortgage payments. At the end of that 3 months, the bank may require all 3 months of those to be paid immediately. And so forbearances are kind of a temporary solution, but they often don't provide a long-term solution. A lot of people go on a forbearance plan, and then at the end of the forbearance plan, they then do an loan modification or a repayment plan. So forbearances are kind of temporary solutions. They're often not great solutions when you have the ability to do a loan modification or a repayment plan or something that actually resolves the default. Again, more information about forbearances are on this page, but that is kind of considered an option to get some temporary relief on paying your mortgage payments. And then the last option to save a home if you're in default is a Chapter 13 bankruptcy. I'm not a bankruptcy attorney, so I'm not going to get too much into detail about that, but I wanted to present that as an option. A Chapter 13 bankruptcy allows your bankruptcy attorney to kind of write you a plan where you can resume mortgage payments and pay back what you owe over a 5-year plan. And so if that's something that you're interested in hearing more about, I strongly recommend you connect with a bankruptcy attorney. So overall, once you figure out what your foreclosure timeline is, whether you have a permanent or a temporary financial hardship, and you want to know what your options are to save the home, you really can look at a loan modification, a repayment plan, a reinstatement, a forbearance, or a Chapter 13 bankruptcy. Those are kind of the main ones. There are a few other kind of nuanced ones, and depending on what your financial situation is will help you know which one to pick. So if you're in this situation where you want more information on which option is right for you, it's probably time to contact an attorney for help, or at least speak with your lender about the different options available. Okay, if you know you have a permanent financial hardship and you just can't afford the home anymore, you're then going to want to look at your options to leave the home. The options to leave the home obviously would be a sale of the home, and there are 2 different kinds of sales. There's what I call an equity sale. An equity sale, real briefly, is a sale where you have money in the home, meaning if you were to put the home on the market and sell the home and receive all of the, be able to pay all of the real estate fees involved, you would still receive money back from the home and you'd be able to walk away. That's what an equity sale is. The other type of sale is a short sale. A short sale is for properties that are underwater, meaning if you put your home on the market and included all of the real estate fees you'd have to pay to close your transaction, you would actually owe more on your mortgage than your home is worth. That means your home is underwater, and that means you can do a short sale. You can still sell your home. A short sale is a perfectly valid option. It's just different than an equity sale. This was a real brief explanation. There are more videos here about what an equity sale is, what a short sale is, how to complete both of those. But basically, leaving the home, you'd have to determine, is your home underwater or do you have money in the property? Once you make that determination, you'll know what kind of sale you have to complete, and then you'd move forward in that way. If you are somebody who has an underwater property and you only have one mortgage on the property, you might want to consider an option called the deed in lieu of foreclosure. Again, there's another video that has tons of information about that, but a deed in lieu, real briefly, is basically where you just create an agreement with your bank where you hand over the deed of your property and the bank agrees in exchange to not foreclose on you. And so obviously, if you have money in your home, if you have the ability to complete an equity sale, you don't do a deed in lieu because you want your money, right? right? But if you owe more than your home is worth, and for whatever reason you feel that a short sale isn't a good option for you, a deed in lieu is also an option to leave. So once again, if you've determined that you have a permanent financial hardship, you know what your foreclosure timeline is, and you know you want to leave, you then are looking at equity sales, short sales, maybe a deed in lieu if that's right for you. A deed in lieu is also called a cash for keys agreement. Sometimes you can get the bank to pay you a little bit of relocation money in exchange for just handing the property back. So you might want to talk to an attorney about those options if that's what you're considering. And then the last kind of consideration when you're at the beginning of the process is, how do you buy more time? So if you're somebody who knows that eventually you're going to leave the property, or you know that eventually your income is going to recover, but you need to kind of extend that foreclosure timeline, there are definitely things you can do to do that. And so another consideration that comes up when you're kind of completing your mortgage relief analysis is, how much time do I have? You already know that because of your foreclosure timeline. And then you need to ask yourself, is there anything I can do to extend the time frame? In Washington State, we have a process called foreclosure mediation. Sometimes mediation is a great way to kind of speak directly to your lender about what your timing options are to see if you can get more time. And so depending on what state you're in, there might be options and things you can do and things that an attorney can do to help you kind of extend that timeline. So overall, ask yourself, what's going on with your income? What's going on with your hardship? Do you want to stay? Do you want to go? If you want to stay, make sure you research those options in detail. If you want to leave, make sure you understand if you have money in the home or not. And then look at your state-specific laws to see what you can do to kind of extend that timeline out if that's what you're wanting. Conversely, if you don't want to extend the timeline out and you just want to be done, call somebody in your area for help and just tell them, I just want to be done. And then a good, mortgage relief attorney will be able to tell you, here's the fastest way to be done with this whole situation. And then kind of my last comment is, if you're talking to somebody about your options, make sure you ask them, what's my best case scenario and what's my worst case scenario? You always want to be prepared for your worst case scenario. A lot of times these options will all kind of play along with each other. So if I have a homeowner who wants to try to stay, but their income isn't very high, sometimes we see if we can work out an agreement with the bank that they can afford. And then if not, we end up selling the property, right? And so I would say to that client, okay, a best case scenario for you would be you get back on an agreement at an affordable payment and you stay in the home long term. If the bank doesn't offer you an affordable payment because your income is low, then we probably want to look at completing a sale of the home so you can retain some of your equity. That would be a common conversation you'd have when you're completing a mortgage relief analysis. So this is kind of what you need to understand. These are all of your options. Talk to someone. If you have a question or a comment, let me know. I'm always happy to, try to reply as best I can. Good luck.